Hey folks, Dan Frio here with your opening bell for July 22nd, 2025. So mortgage rates sneezed a little bit yesterday. I'm predicting they're just going to be stagnant for this week. Why? Well, let's get over to the economic news. Here's the economic news we have for today. There is no major economic news. So what I thought I'd talk about in this video, where are builders building? And this has given us some guidance on where maybe they're pulling out of because there was too much building and there was a stagnation of homes. So where are they actually building now that might be the next catalyst of housing? So we're going to talk about that briefly, and then we're going to talk the earnings report. And why do I talk earnings reports? Well, this is telling us where tariffs are going, how the companies are doing right now, because all this and this news here all has a role in these things over here. So my name is Dan Frio. I actually try to provide you guys information twice a day to figure out what's going on with those and the whys behind it. And the reason why I do this, folks, is most likely if you're watching this video, you're looking to buy or refinance. And I'm actually a mortgage loan officer licensed in all 50 states, where my slogan is one application, one credit pool. I'm going to shop your loan over 30 different lenders. Now, how do we do that? I'll give you that information at the end of this video. You're here for these things. So let's get to it. So let's get over to the markets right now. We had the interest rates drop a little bit yesterday, 0.03. Well, it's better than up 0.03. But the economic news for today, there isn't any. So how do we put together a news show when we talk about real estate when there's really no economic news? Well, let's do this. Let's get over to where the bond market's heading for today, and this will give us some direction on mortgage rates, okay? And then we're going to talk where builders are building, and this might give us some ideas on where they're pulling out because I think they're seeing a market decline, and then the areas that they're seeing are up and coming are where they're building. So we're going to focus on that in a second. But here's what the bond market's done over the last 2 days. Here was my concern. Hold on a second. There was a gap filled. Here's right through here. And you know, I talk about gaps a lot. So what we saw over the last day or two is we saw some gaps taking place, and it's right through here. Here's what I mean by a gap. So what happens is this is the mortgage-backed security bond that we trade, and usually when there's a gap, usually unfortunately gets filled. So this gap, if it were to be filled, that means mortgage bonds would come all the way down to here, or maybe the gap that we created yesterday would come all the way down to here. That's bad news, because if you follow my channel on a daily basis, you know how this works. So here's how this bond market works. If you're looking at this MBS, all you really have to understand is if the price of this bond is going up like you're seeing today, that's good news for rates. It means they're coming down. The bigger the number, well, the bigger the adjustment. A 0.05 isn't really going to do anything to the markets. So let's get over to, now that we know mortgage rates are basically going to be stagnant for today, maybe even tomorrow. They're waiting for some jobs data, and I'll get to that in a second. But let's get over to where builders are building right now, because this might give us some ideas on where, housing might be soft and where the builders are looking that housing might be a little more aggressive. So let's break down this article that we have through here. 2024 data shows that the top 10 builders concentrated in the 50 largest markets, ranging from 38.9% in Kansas City to 97.8% in Cincinnati, Ohio. In 11 metro areas, the top builders' market share exceeded 90%. So where are the builders actually building right now? Well, if you go down through here, this is going to give us a catalyst on where they're feeling. Just think of it. If you're a builder right now and you're really getting robust into these areas, you probably did your research, hopefully, and you know that these will be the upcoming areas. Now, let's first start where they're saying, well, we're going to have a retraction here or decreases. So right now it says, meanwhile, 20 metro areas, so a decline in top 10 builders' market shares in 2023 and 2024, up from only nine decreases from 2022 to 2023. Where's getting hit? Miami, Florida. It's down 18%. Los Angeles, down 15%. Orlando, down 11%. And Tucson, Arizona, down 10%. These are the areas that we're seeing contractions. Okay, but if you want to say, okay, what markets should fare maybe pretty well in this economy? Well, the builders are saying right through here. Oklahoma City, Atlanta, Sandy Springs, Alpharetta, Georgia. Sorry if I butchered that name. Punta Gorda, Florida, Philadelphia, Greensville, South Carolina, Salt Lake City, Utah, and Charleston, South Carolina. So those are the areas that are really picking up right now. So if you're in these areas, you might see somewhat of a pickup, or think of it this way, housing price stability, because if you have the builders increasing their spending in these markets, it's going to add increased inventory in your markets, thus should stabilize the markets, hopefully. Down in these areas, they're seeing retractions, and these are basically the biggest places where people saw the most aggressive appreciation in the country over COVID. Now they're starting to get a hit, and now this basically the central part of America are starting to feel the gains right now that we're seeing through there. So check out that data. If you're in any of these areas, please let me know down below what you're thinking there. Let's get over to the earnings report. Here's what I like to see about earnings, because we're focused in on tariffs. So we're thinking tariffs are going to be inflationary. That's going to push down everybody's earnings because they're going to have to push over the tariffs. Then they're not going to have to hire so many people. That's going to put us in a recession. It's just going to be dismal, folks. Let's get over to the earnings and see how they're actually faring. We did this last week, and I showed you many days that the earnings were reported, especially banking earnings, and they did fairly well. So what are we having today, which is Tuesday the 22nd? Well, here's what we had before the bell. Let's go through here. That's Coca-Cola, GM, and these companies. So let's go over to the side here. Let me get my head out of the equation for 1 second. This is telling us how they did in fair of earnings reports. So let's go down through here. Coca-Cola earnings are about 5% higher than what they expected. LMT, not really quite sure what that is, but that is 11.5 higher than their earnings per share was expected to be reported. And you go down through here, and it's all green. This is saying earnings per share for each company exceeded their expectations on earnings. So let's look at yesterday's spotlight, see what that looked like. Well, it was kind of a mixed bag yesterday. You had Verizon, which was up 2.5%, but you had Domino's Pizza down 3%. And then over through here, also a mixed bag up. What is this? ARE up 79%. So kind of a mixed bag yesterday, but today's looking pretty darn good on the earnings report. So that's not scaring me through there, because it so far doesn't look like corporate earnings are crashing because of tariffs. That's nothing but good news. Now let's get over to the markets to see how the markets are faring basically on no news today. Well, the Dow Jones just surprised. This was in the red and everything else was in the green. Let's go over to what's happening now. The Dow Jones, did you see that? It just went from +4 to +25. So something's going on right there. You just saw that live throughout here. So we got the Dow Jones up a little bit, the NASDAQ down a little bit, oil down at $66, folks. If this gets to 65, you're going to see a double thumbs up because of inflation. And then the 10-year Treasury actually dropping a little bit to point now down 0.03. That means yields are coming down. Let's get over to the CME FedWatch tool. Is the Federal Reserve supposed to cut rates at the next meeting? Well, if you've been watching me daily, you know the answer to this, but let's do a sneak peek of this. In 8 days, the Federal Reserve is going to be meeting. What are they going to do? Well, let's go down through here. You can actually find this, folks, if you just Google CME FedWatch Group. Let's go down through here. What does this tell us? This tells us what the likelihood of the Federal Reserve changing the federal funds target rate at the next meeting. Well, let's go down through here. When you're doing this, go to probability. Bam, we're going to see that. And now this is telling us there is a 97% chance the Federal Reserve is not going to do anything at the next meeting, because right now we're at a 4.25 and 4.5 on the federal funds rate, and they're expected a 97% chance we're going to stay there. So now we have a little bit over a 50% chance in the September meeting that they're going to cut. A lot of analysts are expecting them to cut in September. Some are expecting it to cut in September, October, and December, the next 3 meetings coming. I'm going to say September. I'm going to go out on a limb, say they're going to cut. Everybody, the markets, everyone is expecting a cut in September. So the Federal Reserve, I'm going to have to say, is forced at this time to cut rates. If they don't, there's going to be even more headwinds for the Federal Reserve and the president and everything else when it comes to that stuff. So basically, the good news is today, folks, we really have no news. But mortgage rates are easing just a little bit with the MBS up 7 ticks, meaning rates aren't really going to change based on this. But check out later today. I'll give you the closing bell on how all this fared. But we're going to talk Stock Talk Tuesday today, and I'm going to surprise you guys. We do Stock Talk Tuesday every Tuesday to inform you guys how this markets work, might be some stock options to at least focus in on to maybe make some money. We talked last week about Bitcoin. This week, what are we going to talk about? Going to surprise you there. But if you're involved in real estate or really looking to buy or refinance your home here right now or in the near future, I'd love to be able to help you. Here's who I am and what I do. So my name is Dan Frio. Like I said, I do this report twice a day to inform you guys what in the heck's going on with these things over through here. But my role is I'm actually a federally licensed mortgage loan officer. What that means is I work at a federal bank. Okay, this federal bank that I work at, fantastic. I love it. It gives me licensing throughout the whole country as well as Puerto Rico. But the biggest reason I'm here is this. We're set up with 33 other lenders. Here's that thing I was talking about. One application, one credit pool. We're going to shop your loan over 30 different lenders. How do we do that? Well, my bank is set up with 33 other lenders. These are banks, credit unions, and mortgage companies. Why? We're trying to help you guys out. What are you looking for when you're looking for a mortgage quote? Well, you've always been taught, get 3, 4 different quotes and then pick, whatever one you're comfortable with. Why don't you do this? Why don't you pick the one you're comfortable with and then come to my website? Because here we offer up to 33 rate quotes. How we do it? It's right through here. Go to therateupdate.com. You can give us a call, ask me a question, or actually put in your application. But if you want to check out and see what rate you can get, well, reach out to us. We can you can just give us some brief information. We'll get back with you and saying, okay, right now at the current market, here's what we should be able to do. But if you already got a quote, pick that best quote that you got and upload it right through here. This is called the loan estimate review. What I'm going to do is review your loan estimate with all 33 lenders that we work with and get back with you and see if I can get you maybe a lower rate, maybe lower fees, maybe both of them. Just think if we can get you lower rates and lower fees, then that hopefully will get you to work with us. So if you're looking to refinance, check out our refinance tab right through here. If you haven't done so yet and you just keep monitoring rates, trying to pick that bottom, well, check that out right through here. You're going to just basically put in your information, tell me what rate you want to refinance, and when rates hit that, I'll make sure to reach out to you. And then last but not least, if you're on our website, go down through here. If you're looking to buy your first house, even if it's not your first house, if you're looking to buy a home, check out right down through here. We have up to $7,000 in down payment assistance programs for you. And this is income based. So check out this video. It's going to give you a map as well. Plug in your zip code and it'll tell you exactly how much income you can make and still qualify for this program. So folks, that is my report for today. I'm not really looking for much to happen in the bond market and mortgage rates today. We got the MBS up 6 ticks right now. Rates are going to be basically steady right where they are today. So join me today with Stock Talk Tuesday and then the closing bell on how all this ends the day, folks. So thanks for watching. God bless. Have a fantastic afternoon. See you soon. Bye-bye.